Gold contracts for July delivery are climbing a few bucks on Thursday following a prior day huge sell-off, during which the yellow metal dipped below the psychologically important $1,300 an ounce level. Mike McGlone, the research director at ETF Securities, is with me this morning. Mike, thanks for being with me.
Hey, Joe. Thanks for having me.
Mike, we saw that Putin said he was going to pull back troops from the eastern border. A lot of people said this is why gold had a huge sell-off by nearly $20. What do you make of it?
I think the market, that's an issue in the short term, but 1,300 I think has become less psychological, more of a pivot. Gold's been pivoting around 1,300 since the end of March, low of 1,280, high of 1,330. And what's happening in Russia with Putin, everything is more shorter term. In the bigger picture, the macro, global macro, I think is what gold's focusing on more. And they're becoming more bullish. For one example is look at interest rates. One of the best investments this year so far has been U.S. government bonds. Who would have thought? I mean, the U.S. 10-year note is at 2.67. It ended last year at 3. So bond yields are declining despite the fact that Fed's tapering, and gold forward rates remain negative, which is a sign of pretty solid demand.
When we look at a chart of the latest settlements of the past 3 days, I mean, it's all over the place. Down a few bucks, down 20 bucks, up a few bucks. I mean, it just seems like we are stuck in this trading range.
We are, and oftentimes when markets do that, it means they're ready, setting up for the next move. You have to make it difficult and painful and confusing. And where some of the signals are really coming from is silver. Silver and gold, silver basically is considered leveraged gold. It oftentimes moves much more than gold. But 30-day volatility in silver has declined to the lowest levels in over a decade. And usually when that happens, the market moves. It becomes a big trend. A good example was last year, before it broke down in like April. Silver 30-day volatility got to low levels, not as low as now, and then it dropped from 30 to 20. And then before the big move in 2010 from 20 to 48, it did the same thing.
But what does lows in volatility for silver mean?
It usually means, volatility is always mean reverting. And when volatility gets very low, it usually kind of is a precursor to a trend. And that's just more technical. But what's happening in silver is it just can't go too much lower in the short term or long term because supply-demand imbalances are there. There's a lot of demand, and there's just not a lot of supply coming on board. But in the bigger picture, I think the path of resistance is up.
All right,
At least resistance, I should say.
Indeed. Well, Mike, thanks as always.
Thank you, Joe.
My thanks to Mike McGlone of ETF Securities U.S. For the Street in New York, I'm Joe Dell.